Isn't that right, Carol?
Alright, so this is kind of the way
This is how the ladybug works?
This is how the ladybug works. And the good thing about the ladybug, or the bad thing about the ladybug, is it's not always the clearest picture that you've ever seen.
Right on time, too.
Yeah, it's something like that. However, the good thing about the ladybug is it allows us to record. So everything that's happening right now is being recorded. And if you should ever be absent or anything like that, we have an accounting channel on YouTube that every...
How many views do you get per video?
How many of what?
Views per video.
Dinnerman, what would you say? I'm going to say the most popular video has maybe 5 or 6, something in that range.
I'll subscribe to you. Yeah.
So, it is what it is, but that's okay. It's not meant for everyday viewing. It's meant for if you're gone, you can make it up, and if you're at home or whatever, you don't have to come in and ask me. You can watch it online. The other thing is next year when it's potential that we go we will be 1-to-1, which applies to a few of you, a couple of you. You know, there's a lot of push for, it's called flipped classrooms, which basically means all lectures will be, you'll be required to watch those prior to coming to school, and when you're at school is when you do your homework. So, and the reason they're doing it is because at the college level, that's what's happening a lot. So, it is what it is. We're not using it strictly for that, so it's not necessarily something that we have to deal with. Okay, so I know that my people that were just in here, Macy and Derek, are not going to have any problems with this stuff. But if you go back to day 1, all right, new people in here, basic accounting equation is what? Day 1, accounting equation.
Assets equal liability.
Something not like that. Assets equals what?
Liabilities.
Liabilities plus owner's equity.
Plus owner's equity. Or in case of, we'll be more corporate than sole proprietorship. So it could be shareholders equity or something like that. Basically just equity in general. Okay, so assets. Assets have a normal balance side of what? We've got debit, credit. Assets are normally a debit balance, credit balance. Will, you with me?
Yeah. I'm following.
What is it?
Oh, I have no idea. I was just listening.
What was the question?
Assets. Normal balance. Debit is always on the left, credit's always on the right. If it's an asset, what side is the balance kept on?
Credit. Debit.
Debit. So that's our normal balance side, which means if it has the normal balance on that side, it increases on that side, decreases on that side. Credit, or sorry, liabilities.
Credit.
Same thing. Debit, credit. What's the normal balance side?
Credit.
Credit. So that increases, decreases. Equity, debit, credit. Increases on which side?
Credit.
Credit. So that's our normal balance. Increase, decrease. So if we look at work together, it's just giving us some accounts. Prepaid insurance. If it's okay with everybody, I will still abbreviate prepaid insurance with PPI. Okay, it's asking us prepare a T account in parentheses to the right of the account title, identify as an asset, liability, owner's equity, revenue or expense. Okay, so prepaid insurance is what? Asset, liability, owner's equity, revenue or expense. Is insurance a good thing? Prepaid.
Asset.
It's an asset. Anything paid in advance is an asset because it has value. So, asset tells us that it's debit, credit. Down here, it's confirmed assets have
How
a
would
no
you abbreviate asset?
DR.
It's not an R and debit though.
No.
I just write D.
It is though. I don't know why. I know that the origin of the word is Latin and it has something to do with that, but I'm not positive on the specifics. So it's a debit, normal balance side, increase, decrease. Next one says merchandise inventory. First thing, what is merchandise inventory? Huh? It's not supplies.
What you're selling.
It's goods that you have for sale. Now, goods that you have for sale, is that asset, liable? That is an asset. So that means we have a debit, credit, normal balance,
I need that back.
increase,
I'll
decrease.
get back. I'll do one.
Did I not give you one?
What?
Oh, you need the marker. All right.
Oh, writing utensil.
Advertising expense. Asset, liability, owner's equity, expense, or revenue. Given the title of the account, advertising expense, it's an expense. Okay, now, expense obviously isn't one of these categories, asset, liability, owner's equity. So, expense is correct here, but what category does it fall in? Is it an asset, is it a liability, is it an owner's equity? We know this is debit. We know that's credit. But advertising expense, Macy, asset, liability, or owner's equity, what would it fall under? It's owner's equity. Okay? It's a contra account. So a contra account means it goes against the normal balance. So normal balance of an equity account is credit. So for an expense, it's a contra account. It's going to have a normal balance as a debit, which increases, decreases as a credit. Okay, then I've got when entertainment. And it says behind when entertainment that it is an accounts receivable. Accounts receivable, asset, liability, owner's equity, revenue, or expense. Accounts receivable.
Asset.
They owe us, so it is an asset. debit, credit, normal balance. Okay. Lee Enterprises. Asset, liability, owner's equity, revenue, expense. Well, it says Lee Enterprises is an accounts payable, so that's a hint. Anything that says payable is always what?
Liability.
It's always a liability. Because that means we owe them money. So we've got our debit, credit, increase, decrease. Sales. Asset, liability, owner's equity, revenue, expense. Carrie, you're awful quiet.
Sorry.
You tired from last night?
No, she had the flu. She didn't go last night.
You didn't go last night?
Yeah, pathetic is that? There's a trash can right in front of the student section.
You okay? You feel better today?
No, I don't feel better.
I don't expect
But you sucked it up and came to school.
Yeah, I came late, and I'm probably gonna leave early, but
That's admirable.
I'm not.
Alright, so sales. Asset, liability, owner's equity, revenue, or expense?
Revenue.
Revenue. Okay, revenue. We don't have one of these, so is revenue an asset, liability, or owner's equity?
Owner's equity.
Does it help owner's equity or hurt owner's equity?
Help it.
Helps it. So it's going to have the same balance side.
Double
Increase, decrease. Stock. Capital stock. Asset, liability, owner's equity, revenue or expense.
Owner's equity.
Owner's equity. Capital stock good for owner's equity or bad?
Good.
Good. Increase, decrease. Last one is cash. Cash is always
Liability.
an asset, debit, credit, normal balance, increase, decrease. All right, so 1-1, nothing to it, right? We're just getting back in the swing. All right, so if we go to 1-2,
We have to do on your own.
well, we got to start doing 1-2 here.
Yeah, I know.
Okay, so this shouldn't be anything crazy. We've done this before. And we have a purchase journal. We have a general journal. Transactions that go in your purchase journal are what? Anytime you do what? Anytime you buy what?
Mr. Fogg, can I get a pencil real quick? In my locker. It's right.
Yes. Purchase journal is for anytime you do what? You buy what?
Services,
No.
expenses,
Supplies.
supplies,
No.
office supplies.
No. McGee, help him out.
Insurance.
Help him out, McGee.
Stuff that people buy from you. I don't know.
You're gonna buy, you're gonna buy.
Well-
Stuff that people buy from you.
No.
Okay, so McGee's right because she is looking at the column headings, and I see in my column headings I have an accounts payable, so that means there is going to be a liability involved. And then my other heading, oh, there we go. Gosh dang it, I forgot to talk about this. Normally, in the past, what we've done is we've dealt with one department. So we're gonna keep expanding upon this. We'll have multiple departments, and we'll keep track of all of them separately. So for instance, if you walk into Walmart and you see they have signs above, so you have a grocery department, you have a men's clothing, you have an electronics, you have everything. And all of these different departments have everything kept separately for their own department, so they can pinpoint issues more accurately and take care of them. So this business is telling us it has two departments. It has discs and tapes. Any of you ever bought an audio tape? No, yeah.
For Queen.
Does anybody have a tape player in their car?
Yeah.
You just have one in your truck? You have a tape player at your house? I do. I've got like several soundtracks.
Summer Jam. I'm plugging into the headphone thing that goes some classics.
Back in the day, they used to have a tape, well, most cars had a tape player. And then when CD players were becoming more prominent, similar to like plugging into the auxiliary jack, you would have a CD player that instead of having like headphones, it would go in the tape player deck, and then it would play. You'd have like a portable CD player sitting on your lap, which, yeah, exactly. So times aren't all that much different than they are now. But
My computer thing shut off.
did your monitor come unplugged? So, purchase journal is used for a specific type of transaction, and the type of transaction is when you purchase merchandise on account. If you purchase it on account, that means what? That means you haven't paid for it yet. You're going to owe them. And if you purchase merchandise, merchandise infers that you are going to be doing what with that product? Selling it. So if I purchase supplies on account, it does not go in the purchases journal. It would go in the general journal. So I'm looking at the 1-2 work together. And on March 1st, 2013, it says we purchased tapes on account from Raymond Wholesalers, 1350. So I know Raymond Wholesalers, it's P283, so my purchase is 283. And my accounts payable is going to be credited 1350. And then my purchase is going to be debited, but is it going to be debited in discs or tapes? Well, it tells us tapes. So it's 1350. Next one on March 2nd says purchase discs on account from Artex Music. So Artex. And that's 284 for $965. And it says we are buying discs. I did the first one wrong, didn't I? I did. So I'm going to draw a line.
I was wondering why we did that. I was confused.
I apologize. Okay. Next one. Okay. On the 5th, it says we returned discs. Returned discs to Dade Incorporated. And 165 from purchase invoice 280 DM36. So break this down for me. What do I got to do? Okay, well, I know the first thing, basically what we are doing is we bought, on purchase invoice 280, it says we bought stuff and we're returning $165 worth. So what we're taking is this transaction, this type of transaction, and we need to flip it because we are taking stuff back. So this is in our general journal. So up here we are crediting accounts payable. So when we take stuff back we would do debit. So we have accounts payable, and that's for the general account, so we're going to add a slash, and the slash on the other side would go the company that you're returning stuff to. So this is Dade Inc. This is DM 36. The amount is $165. And then on the credit side, well, up here we debit purchases, so down here we're going to do what? Credit, but we don't credit purchases. Anytime we return something, we use the account called purchases. What? Returns and allowances. However, since we have departments, there's more to it, because you need to say what purchases department we are returning from. So it's going to be discs, 165. Okay. On the 6th, it says received an allowance on tapes from Raymond Wholesalers. So we're going to do the same type of thing. We are accounts payable, Raymond Wholesalers, DM 37, $100, and then we have purchases R&A, and that is for tapes for 100. We're almost done. Purchase tapes on account from Quality Tapes on the 18th. So purchase tapes on account, purchase journal, 18th, Quality Tapes, $285, and the amount is $268, and we are buying tapes, so it's $268. And the last one is the 23rd. Purchase tapes on account from Castle Records and Tapes. $286, $993, $993. Okay, so it says journalize each of the transactions. We have done that. Post the items that are to be posted individually from the purchases journal. Okay, so posting. Only the individual items. So what we're going to post is these amounts: $1350, $965, $268. $993 into the accounts payable journal. So I'm going to flip the page. I have, this is my general ledger, so I'm not looking for this really. I am looking for my accounts payable ledger, which is 2 pages back. And I'm going to find Raymond Wholesalers, because that's my first transaction. And this is 2013 March. And the date on that first transaction is the 1st. I don't need to have an item here. My post reference number will be the journal from which I got that information. The journal from which I got that information is the purchases journal, so I put a P, page 3. And I credited that $13.50, and it has no balance previously, so it now has a balance of $13.50. My vendor number is 280, so when I go back to that original page, my post reference number is going to be 280. And then I will do the same thing for Artex Music. Artex Music, it's one of my favorites. You guys probably don't even remember Sam Goody Music, do you? You guys never heard of Sam Goody Music? That's Purchases Journal, page 3, 965 credit. So I have a previous balance of 480. 965 would put me at 1445, right? $14.45, post reference of 210, so 210. Quality tapes. This is on the 18th. P3. 268, 268. Vendor number 270, so 270. And then the last one on this one says Castle Records and Tapes. This is on the 23rd. This is P3. Credited for $993. I have a previous balance of $760, so I am looking at $1753, right? $220. $220. Okay, so in the book it says I have number 2 was post the items that are to be posted individually from the purchases journal. That's done. Number 3 says post from the general journal. So now we're down to the general journal. The first account we are posting to is accounts payable. And we are debiting that $165. The general journal, page 3. So accounts payable is the first column or first account in there, and this is March 5th. This is from the general journal, page 3. Debit of $165. My previous balance is a credit of $21.70. So am I going to add or subtract those? You would subtract those, which gives me $19.70 will be $2,005. The account number is 2105, and I'm going to write that small because if I have a slash over here, I have to have a slash in that reference box. So slash 2110. And then on the other side, I've got Dade Inc. So now I got to find Dade, which will be in the accounts payable ledger. And this is on the 5th. G3 debited 165. I have a previous balance of 570, which gives me a new balance of 405. That vendor is 230. So my 230 goes on the other side of the slash. Purchases, returns, and allowances, discs. Probably be on the next page. It is. Open the account 2013, March 5th. G3. Purchases, returns, and allowances, discs is 165 credit, which gives me a balance of 165 as a credit. Account 55115. So we are 5115. Last one more of the same type deal. Okay, accounts payable on the 6th. G3 debited 100. Gives me a new balance of 1905. 2105. I don't know why I put 2110 over here. I shouldn't have. 2105 there. Raymond Wholesalers on the 6th. G3 is going to be debited 100. New balance of 1250. $280. And then I've got purchase, returns, and allowances, tapes. So looks like that is on the top of page 10. March 6th. G3 credited $100. Gives me a new balance of $100. 5215. We're just about done. Getting real close. 5215. Alright, so that is step 3. Post from the General Journal is done. Number 4 says prove and rule the purchases journal and post the totals. So I'm just going to add up my purchases journal. I'll tell you what, I will add up the purchases debit discs column and you guys get the other ones. Alright, I've done my part. I've got my totals here. Alright. I did 33% of it. I'm only one man. I can only do so much. I need a little help. Huh?
I call them nose goes.
The tapes column is 2,611.
I got 2,500.
Come on,
It's already, these are already found.
It's got to be 6.
2611.
Yeah.
I didn't even say anything.
And
Right.
the accounts payable column.
What I said.
You said 5.
You said 5.
No, I didn't. Look at my freaking calculator.
3576.
3576. Okay. Okay. Now, the quick, easy way to check, these two added together have to equal that. So It looks like they do. Okay, so I'm going to double underline those. And then the last step I have to do is I have to post these three totals to the account column heading. So this amount, 3576, goes to where?
Accounts payable.
Accounts payable, which is on the next page. So this is the 31st, P3, and it says accounts payable credit, so we're going to credit it. 3576. I have a previous balance of 1905, so that would mean I am at 5481. $2105 goes underneath this in parentheses. 2105. Purchases debit discs. So on the next page. P3 purchases debit for how much? $965. Gives it a balance of $965. And that is 5105. And 2611 goes in purchases debit tapes. $2611. Balance 5205. Okay, and that's that. Okay, notice the last thing it says the ledgers used in this problem are needed to complete the on your own one too. So you'll be using the same ledger accounts as we were just using. So you can do 1-1 on your own an application and 1-2 on your own application. Probably fairly simply. And now that I'm done, we can make this magic appear online. You excited for this, Ferguson?
What's your YouTube channel?